There's not very many things that are more important than deciding when to invest in real estate and buy your first home. I really wanted to talk through the current market and considering buying what things that you really want to look at when considering. I've been in the business for over 20 years and a top producing mortgage advisor. And I'm talking all day to potential home buyers around should I purchase a home now? Should I wait? And what are the things that we really need to be looking at in order to make a educated decision. So that's what we're going to be looking at today, and the biggest factors that we're going to be looking at is what impacts housing and making that decision. One is going to be inventory, how many homes are selling and how that impacts price, as well as what the values of homes are doing, what they're expected to do in the future, and then mortgage interest rates. So, looking at all those factors along with affordability are going to be the biggest things that you need to consider when purchasing a home and deciding the time to purchase. So, let's talk through a couple things. First, let's talk through value. And it's really important when you're making these decisions that you're looking at the stats and the data to help support this information because all patterns of life, of anything, show what's expected to happen in the future. Now, this, I like showing this a graphic here because as you can see, this shows rates falling. Green means the interest rates are lower, red means interest rates are higher in this graph. And so, what this is showing you, and you can see the different years 2016, 2024, this is one thing that you want to look at as far as determining what the values of homes are expected to do. Now, this specifically is showing that when interest rates go down, so does inventory. This red line here is the US single family inventory. So what you're looking at with this line is how many homes are available on the market for buyers. When interest rates come down, there's less homes available because there's more buyers in the market and properties end up moving quicker. And so there's not as much that sits on the market. And then you can see here as interest rates go up, a little bit more inventory because there's less buyers that can afford. So you kind of see how this is a relationship as to when interest rates come down, there's less homes available. When there's less homes available, then that means that there's more buyers putting in offers per property, which drives up price. So when we're looking at where we are currently, as you can see here, very, very low inventory. Now, there's a lot of stats that go into this specifically. And so you want to look at a couple different things as far as inventory is how many homes are available to be purchased. And then how does that look with how many people are available to purchase a home? So supply and demand, right? Now, a lot of people are concerned because of 2007, 2008. Everybody knows about the crash, or your parents told you about the crash. And so it created a lot of concern, but that was a whole different time frame because it was overbuilt. So as you can see here, you can see where we're at as far as 2007, there was 301 million US populations, but look, there was 4 million listings. So if you have 4 million listings but only 301 million US population, you are overbuilt, meaning that there was too many homes, and that's why homes were sitting on the market. And then there was a lot of fraudulent activity from banks at that time where they were giving loans to people that didn't qualify, which was called stated income, meaning that they didn't even verify the income. They just kind of went off someone's word as long as they had a decent credit score. And so people were just making up that they made more money than they really did, and then they couldn't afford the home. There's a lot of laws in place now that prevent that. So a lot more stability within the housing market to where people are truly qualified to purchase a home. And so it's a completely different stand time. Now, if you look at current market, you could see that there is just more population. And that's because if you go back and look at the birth rates, let's say 35, ages 30 to 35, there was more birth rates during that time, 30 to 35 years ago, than there had been before. And a lot of it goes back to, birth control and all of the birth rights that are around that time frame. But that means there was more births during that time, which means there's more people that are looking to buy right now, and we just don't have enough inventory to supply for the housing for that. So when we're in deficit, meaning that we have more buyers than housing, then that means that the inventory is going to continue to stay low. And when inventory is low and there's a high demand of buyers that can still buy, again, it sustains pricing because we just don't have enough here to be able to sustain the growth. We don't have enough land, especially in, California in our areas. There's not enough land to even build for how many people need housing. And if you look at the values, this here I love looking at it because again, data supports future. If we look back all the way to 1942, red means interest or the values went down that year. Green means that the values went up that year. So since 1941, there's been 75 times that values went up those years, and only 6 years, and we talked about the crash and what happened there, that the values went down. So if we were to bet on what we think values are going to do, as you can see here in sustainability, it's unlikely that we would see values go down, especially when we have very low inventory and high demand of people that can still afford to purchase. You can see here all the forecasted by, although I call them smart people, so not what I'm forecasting, but the actual smart people that are tracking all the numbers of the forecasts had said, this is what we think home values are going to go up 5.5% of the price or the value of the home at that time each year. It actually went up six, and then the second year it went up higher seven. And then the prediction of 2024 is that we should see a 4.5 to 5% appreciation, which is a good, stable, healthy appreciation. Really, we want these numbers. We don't want to continue to go at a high pace, but these are healthy numbers. And so if you purchase today, and this is just showing even a basic $300,000 home, you would buy the home today at 300,000, but as you continue to wait and home prices go up, and this is just saying a 4% appreciation, not even what's expected, how much more you're going to end up paying for the home over the years if you continue to wait. And so understanding how that works and how appreciation works and how the values work is one important factor that you need to consider when you're looking at, should I purchase a home today? Another factor is what you're currently paying for rent. So, I mean, 2750 is pretty conservative. I know there's a lot of people paying more and some people paying less, so conservative number, but you assume if you're paying 2750 a month for rent, that's $33,000 a year that you have giving you no return on your investment. And so each year that you continue to rent, that's money that could be put towards investing into a home that's going to give you a rate of return. Now, let's say that you were going to buy today. Let's just say it was 550,000. Let's say you put 10% down and you got a 30-year fixed rate mortgage at 6.99. Your payment roughly would be about 4,000 out of pocket, depending on where we are, somewhere around that. Out of pocket is for your down payment and closing costs, which are required when you purchase a home, and there might be some room for negotiations. But a lot of times people think, okay, well, I think that it's better, that I wait and purchase when home values go down. And so you may think, Kristen, that's great, but I think I'm going to wait a little bit. We're just going to hold off and kind of see what's going to go on with rates. We know that they're expected to come down a little bit because that is true. As inflation comes down, mortgage rates will come down too. The Fed's number one focus right now is to lower inflation. And if we look at the history, every single time that inflation comes down, every single time rates come down as well. So we know rates are coming down. It's just a matter of, will it be in a year? Will it be in 2 years? How long will it take for the Feds to correct the inflation issue so that we could see interest rates come down? So we know rates are coming down, and you say, okay, well, I'm just going to wait 6 months and let rates fall down a little bit more. Well, let's say that they do fall down a little bit, but now that home is appreciated some, right? Because we just talked about home appreciation over the year, and in 6 months, it's going to appreciate half that amount. So let's just say it now that same home that was 550 is now 565. Rates have come down, and as rates come down, there's more buyers in the market, which drives up price. But now, yes, your payment's a little bit less, but not a ton, right? Because now you're paying more for the home, which means your loan amount's higher. So even though your rate's lower, your payment's not that much different. And now you need an even bigger down payment. So instead of 55,000, now it's 56,500 because your price is higher. Now you need a bigger down payment. And you say, yeah, I get that, but I'm going to wait until rates come down even more and then it'll make a bigger impact. Now we do think rates are going to come down. I'm going to use 5.25 as a conservative number. I don't think we'll see 3% again, but let's say in 18 months, now that same home that would have been 550 has appreciated to 593. Now, to put it in perspective, every 1% lower in interest rates means there's 2 to 5 million more buyers in the market. So not only do you have to consider that the home value is going to appreciate, when you have more buyers on each property, what happens? If you have 10 offers on one property, everybody's competing with each other, which means you're driving up the price. So even if the home was worth 593 with the appreciation, most likely as rates come down, and we saw this during COVID when interest rates were really low, people were having to offer $20,000 over asking price, over the value in order to get their offer even accepted. So this is being conservative, and let's just assume that we wait and home values have gone up and you're not having to put in over asking and rates drop to 5.25. Well, yeah, now your payment's 37.23. So you can say, yeah, Kristen, see, I waited a year and a half. And instead of my payment being 37.23, it's now or 4,014, it's now only 37.23. Well, now your down payment went from 55,000 to 59,000 because it's a higher price. And you just paid a year and a half of rent if you're whatever your rent is, but in this scenario we're saying it's, 33,000. So I mean you're paying was that 49, $50,000 in a year and a half that you just wasted on rent, and you're paying more for the home to save less than $300 a month. Now, I invite you to explore what most home buyers are doing right now that can afford to purchase in this market so that they can gain more worth, massive wealth in buying in this market. So you buy today, right? We talked about that. We buy today, and we'll stick with the first one here. And you say, you know what, Kristen, I want to consider just going ahead and purchase today. I think you're right. I think that, the values are going to go up even when the rates come down. We don't want to compete in a market where there's multiple offers and we're having to pay more than the home is worth. So if we buy today, our payment's going to be 4,014. But when rates do come down in the future to that 5.25, and you're one of my clients, I actually give you a discount to restructure your financing and redo it for you at less costs so that you can get into this 5.25 rate. Now look, your payment's only 34.37. So although you're going to have a little bit higher payment today, in the future, if you were to have waited, until you have 18 or waited a year and a half until rates came down, you would have been ultimately paying an even higher rate. So right now you'd only be paying 34.37 for your future long-term payment when rates drop versus if you would have bought it 18 months, it would have been 37. So although you may save 280 bucks here by waiting, you wasted a year and a half in rent versus if you buy today and you pay 280 bucks more until the rates drop in a year or two, and then you end up saving an additional 570 bucks a month versus 280. So we always got to look at where are we at, where's the market going, and the impact. Now, I'm not saying everybody should buy today. There's some cases where we have a consultation and I tell you, hey, I think that we should wait. I don't think that it is a good time for you to buy. And we have that conversation. Then we create a plan of how to put you in a better position for the future. But if you can afford a payment today, for most people, if you're paying rent, it makes sense for you to buy sooner than later. It works just like compound interest. The sooner you buy, the more you're going to make within your wealth, especially with the direction that we're going with interest rates and housing prices staying sustainable because of low inventory. It's going to continue the cycle so that you can be in a position to buy the home that you want today and then be able to get a lower payment in the future. Even if that means that maybe you have to lower your 401k contribution to afford a higher payment right now so that you have monthly more income on your paycheck. And then when rates drop, you go back and now make up for that. So there's different ways that we can restructure to be able to help you afford a higher payment. Plus, you have to take into consideration you may have tax benefits, meaning that because of the tax incentives that you get for purchasing a home, you may end up being able to free up several $100s more a month to help you afford a mortgage, which we go through all that information on our consultation for us to be able to go over and look at, does it make sense for you to purchase today? And if it doesn't, I help you create a plan to purchase in the future. Because if we're going to wait until interest rates drop, we need to make sure you're in the strongest position possible for putting in an offer, meaning that we need to make sure that your credit score is solid. We need to make sure that you have enough for a down payment. We don't have to ask for any credits from the seller because in a market where rates are lower and there's multiple offers, you're going to most likely pay asking or over asking. You're going to be trying to outbid other offers and you're not going to be able to get any credits from the seller. Now, if you're looking at selling and buying in those markets, typically a contingent offer is not accepted, which is where you have to sell your home in order to buy another home. So if you're looking to sell and buy, you definitely want to purchase in today's market versus waiting for rates to go down. Many people that wanted to sell and buy weren't able to do so when interest rates are low because their offers weren't being accepted. But we could talk through all the strategies. I want to make sure you have all the right information always on your timeline. I'm always here to provide education and value so that you can make the best decision for you and your family moving forward. So please give me a call so that we can go over your options today.